For most people, modern finance feels like a product of the last century. Screens flashing data, algorithms executing trades, central banks moving money with a keystroke. It all seems technical, advanced, and almost entirely disconnected from human history. But that assumption hides a surprising truth. The logic driving today's financial systems didn't originate in universities, banks, or economic textbooks. It originated on battlefields, in the chaos of war, thousands of years ago. Not modern war, ancient war. Before spreadsheets, interest rates, or balance sheets, states faced the same fundamental problem they face today: how to deploy scarce resources in a hostile environment without destroying themselves in the process. The battlefield was simply the first place where this problem became unavoidable. And the solutions discovered there never disappeared. They evolved, migrated, and quietly became the backbone of modern finance. We make a common mistake when thinking about war. Most imagine violence, glory, and decisive victories. The reality is simpler and harsher. War was always about allocation. Who gets fed? Who gets paid? How long supplies last? How much strain a system can endure before it breaks? Victory mattered, but sustainability mattered far more. States that won battles but exhausted their resources rarely survive long enough to benefit. This is the logic that still governs finance today. 2,000 years ago, leaders discovered a brutal truth: the greatest threat to a state wasn't always the enemy across the battlefield. It was overextension. Armies collapsed not when they lost a fight, but when they outran their supply lines. Campaigns dragged on, costs accumulated faster than outcomes, and treasuries drained faster than armies advanced. Empires didn't fall because they lost battles, they fell because they bled. That lesson never disappeared, it simply changed form. In ancient warfare, every decision carried a cost. March farther, feed more mouths, mobilize faster, exhaust labor. Prolonged conflict, drain the treasury. Leaders who ignored these constraints didn't just lose wars, they destabilized entire states. The smartest strategists weren't obsessed with winning at any price. They were obsessed with minimizing exposure. Modern finance follows the same principle. Markets reward speed, efficiency, and information dominance, not because they're fashionable, but because they reduce costs. Capital moves faster than armies ever did. Data replaces scouts. Liquidity replaces supply wagons. Yet the underlying logic is identical. The system favors actors who achieve outcomes without unnecessary conflict, friction, or waste. Consider leverage. In war, committing too many troops too early left a state exposed if circumstances changed. In finance, excessive leverage magnifies gains but collapses systems when assumptions fail. The lesson remains unchanged. Power borrowed against the future is fragile. Ancient commanders understood something modern investors often forget. The longer you stay exposed, the greater the chance of failure. Time is not neutral. Time compounds risk. This is why intelligence was always cheaper than brute force. Knowing where not to fight saved resources. In modern markets, information asymmetry serves the same role. Those who detect shifts early reposition quietly. Those who react late pay the price. Finance, like war, punishes noise and rewards foresight. Even diversification traces back to battlefield thinking. No state concentrated all its strength in one location unless it was desperate. Flexibility wasn't philosophical, it was survival. The same logic applies to capital allocation today. Systems that rely on a single outcome eventually break when conditions change. What often appears as modern financial sophistication is, in reality, ancient caution wearing a new suit. Nowhere is this clearer than in how institutions measure risk. Ancient states tracked shortages, unrest, and rebellion. Modern systems measure defaults, inflation, and systemic failure. Different metrics, same underlying fear. Collapsed doesn't announce itself. It accumulates quietly through small miscalculations. This is why modern finance still prioritizes containment over conquest, stability over dominance, resilience over spectacle. The objective isn't to win decisively, it's to endure longer than competitors. Outlasting rivals has always been cheaper than destroying them. Even inflation follows the same logic. Historically, debasing currency allowed states to fund prolonged conflict without immediate collapse. Today, monetary expansion performs a similar function. It delays pain, redistributes cost, and keeps systems moving. The strategy hasn't changed, only the scale has. The uncomfortable truth is that modern finance didn't abandon war logic, it perfected it. Conflict became abstract. Instead of armies colliding, balance sheets clash. Instead of territory changing hands, purchasing power does. Instead of sieges, we have liquidity crises. The mechanics look cleaner, but the consequences remain just as real. Financial crises across history follow familiar patterns: overconfidence, overextension, misjudged resilience. The same errors that brought down ancient states destabilize modern global markets. Names change, tools change, technology changes, but the pattern remains. At the core of this continuity lies restraint. Ancient strategists knew that true strength was measured by what you could afford, not by what you could attempt. Modern finance follows the same rule. Systems collapse when ambition outpaces capacity. This is the war strategy finance never escaped. Not aggression, but calculation. Not domination, but endurance. Not victory today, but survival tomorrow. The world didn't stop fighting wars. It simply moved them into spreadsheets, currencies, and institutions. And the same rule still applies. The side that manages costs best usually wins. Even today, governments fail not because their enemies are stronger, but because their economic logic is flawed. Mismanaged budgets, unchecked spending, poorly timed interventions, they are the modern equivalents of armies marching beyond supply lines. Every miscalculation compounds, every delay costs, every oversight risks collapse. Information remains the cheapest weapon. Intelligence, strategy, foresight, and timing all reduce cost. A single well-timed financial maneuver can prevent months of unnecessary expenditure, just as a single spy once prevented a wasted campaign. Efficiency, not brute force, dictates outcomes. Speed remains a measure of cost efficiency. The faster a decision is implemented, the less exposure accumulates. Prolonged operations, whether in battle or finance, burn resources and weaken systems. Victory delayed is money burned. Efficiency ensures survival. Even seemingly modern phenomena, market bubbles, speculative investing, central bank interventions echo battlefield logic. States once learned to avoid overextension at all costs. Now institutions and corporations do the same, cloaked in terms like risk management and liquidity planning. The language has changed. The principle remains. Resilience is the ultimate objective. Ancient commanders knew that crushing the enemy meant little if your own state crumbled. Modern finance follows a parallel principle. Maximizing gains matters little if the system cannot endure shocks. Debt, leverage, inflation tools, and hazards alike must be calculated with an eye on long-term survival. History doesn't repeat itself exactly, but it rarely changes its underlying logic. Battlefields have become markets, soldiers have become capital, supply lines have become cash flows, and those who understand this invisible battlefield are positioned to thrive. If you don't recognize the battlefield you're standing on, you're already part of the campaign. The lesson is clear. The most powerful actors are not those who dominate aggressively, they are those who calculate meticulously, conserve resources, and move with foresight. Victory is measured not by immediate conquest, but by enduring strength. The war never ended, it just moved into new territory, the world of money. And the ancient logic that once governed armies now governs the global economy, quietly, relentlessly, and without apology.